It's a unique situation. It's something we have never seen before in the history of gold as an investable asset. That history actually beginning in 1971. I think the gold market itself has just gotten too large, and the upside momentum has gotten too great for even um, central bank forces that would be fighting against gold to manage, because most central banks now are actually buying gold. That big factor of the Fed pivot coming in, and it's really just fueling yet another rocket shot higher in gold and silver.
Gold enjoyed one of its strongest runs of the year this week, as downbeat U.S. data and a more dovish Fed combined to boost the yellow metal. And even Friday's flash crash did little to dampen precious metals traders' enthusiasm. The World Gold Council's Q2 2024 report highlights a year-on-year increase in gold demand, marking the highest second-quarter demand since 2000. This surge is fueled by central bank purchases and OTC investments, with central bank gold buying up by 6% and technology sector demand rising by 11%. Brien Lundin, the editor of Gold Newsletter and the CEO of the New Orleans Investment Conference, believes we are at a historic moment in the gold market where the rules have completely changed. Despite the Fed not yet cutting rates, gold has reached all-time highs. He outlines the reasons why he thinks we are in a new era for precious metals, highlighting that when the Fed does pivot, the impact on gold prices could be explosive. The Federal Reserve left rates unchanged in July, as widely expected, and Powell put the SEP rate cut on the table, assuming conditions are met. Traders are pricing a more than 70% chance of the U.S. Central Bank lowering rates by 50 basis points in September, compared with an 11.5% chance a week earlier, according to the CME FedWatch tool. Despite the delay, gold prices did not drop. Instead, they rose by about $300 an ounce and entered a higher trading range. Asian investors, particularly in China, are driven by a lack of alternatives due to the poor performance of the Chinese stock and real estate markets. They view gold as a form of savings, leading to increased buying as prices rise. Brien believes this trend could result in an unprecedented surge in gold prices if it continues. Ready to uncover more insights? Remember to subscribe and turn on notifications always to get our latest content.
Yeah, what we're seeing right now is a shift in the major drivers for gold. Actually, since this big rally started on March 1st, the rally was caused, a big driver at that point was central bank buying and buying by domestic Chinese. I think there was also some shifting of smart money, big portfolio allocations toward gold for kind of the same reasons that central banks were investing in gold, that being trying to insulate them from the US dollar, and recognition that we were at some point going to switch to the rate cutting side of the interest rate cycle. What's happening right now is that the broader public, most investors are now beginning to price in that next big driver, that being a Fed pivot. We thought we were going to see that pivot in as early as February of this year. And back then, the projections were the markets were pricing in 5 to 6 rate cuts this year. And those rate cuts kept getting postponed. The Fed pivot kept getting postponed. And you would have expected that the gold price, which had risen in anticipation of that factor, would have lost maybe $200 an ounce. But instead, it gained about $300 an ounce and got into a much higher trading range. And now where you see that big factor of the Fed pivot coming in, and it's really just fueling yet another rocket shot higher in gold and silver. It's a unique situation. It's something we have never seen before in the history of gold as an investable asset. That history actually beginning in 1971. Previous to that, it was widely considered as money. And not so widely considered, but considered by me and some others at least as money since. But still, you could not invest in, it wasn't a risk asset, an investable asset until 1971. Since then, we've had 3 big bull markets. But we've never seen in any of those markets, bull markets, we've never seen Asian investors, particularly Chinese investors, buy on the way up. They usually buy on price declines. They've exhibited bargain hunting characteristics in the past, and which has been helpful because it supported the gold price on price declines. But in this case, they have been buying as the price has gone up for a number of reasons that we might want to get into later. But that's a new thing. We haven't seen it before. Now we're seeing, and typically in those previous bull markets, it's been the Western investors that have bought on the way up, chased the price higher. Now we're seeing that big factor of a Fed pivot come into view, and this is bringing the Western investors in because, again, that's a trend they understand, and they're going to start chasing the price higher. The fascinating thing, and I think the exciting thing that I see, is that this doesn't mean that the Asian investors are going to stop buying. In particular, central banks, which aren't that price sensitive, may not stop buying either. So if we have Asian investors, the East buying gold, and we have the West buying gold at the same time, that's going to be something that we've never seen before. And the reaction in the gold price could be truly explosive if that develops. We'll see more data come out as far as Asian buying, and I'm very curious to see what that's going to show. One of the reasons why Asian investors have been buying, particularly Chinese investors have been buying so heavily, is that they don't really have any alternatives. The Chinese stock market has been in the dumps. The Chinese real estate market has a number of problems that are well known. And those are the two primary investment markets of Chinese savers and investors. And they look at gold as some form of savings. That's why they buy it on price declines. They put money away and hoard it in gold. They don't have other alternatives to this. That's why they are buying or have been buying the price on the way up. They're starting to get that kind of FOMO, that investing fever for gold. And I think they don't look at, they kind of sense that the opportunity to put their money away at lower prices is fleeting, so they want to get in now.
When it comes to silver, Brien noted that it is different. He said, "I'm kind of middle of the road on the conspiracy angle. I don't think or haven't thought that gold was manipulated on a day-by-day, tick-by-tick basis." Silver struggled for 2 years to break resistance, down green arrows, located in the area just above $26. The breakout finally occurred in April, and silver subsequently pulled back to that area of resistance and rocketed above $30. Bank of America currently sees silver prices averaging around $28 an ounce this year. The average price is expected to jump sharply to $34.50 an ounce in 2025. Brien believes that the silver story is unique in the precious metals universe and that it will leverage gold, as it has in past bull markets. However, he expects it to do so even more explosively now because shorts are desperately trying to defend their positions. Now let's redirect our attention to a video.
I'm kind of middle of the road on the conspiracy angle. I don't think or haven't thought that gold was manipulated, as some claim, on a day-by-day, tick-by-tick basis. I think anyone who claims that it's not being manipulated is getting the whole logical argument wrong. The burden of proof is actually on anyone claiming it isn't manipulated, because it's been manipulated repeatedly, publicly, covertly, and overtly over the decades previously. The government has demonstrated, and governments have demonstrated, that they're perfectly willing to manipulate the gold price at key junctures to progress their policy positions. However, silver's kind of a different thing. You look at the custodian of the big SLV, or rather SIL, gold silver ETF, is actually SLV. I'm sorry, is J.P. Morgan, and this is an enterprise that was called a criminal enterprise by the U.S. Justice Department due to its manipulation of precious metals prices around the fix. J.P. Morgan also holds one of the biggest silver positions in the world today, if not the largest, and therefore you're never quite sure, or at least some people have raised doubts as to whether the silver in the ETFs is in the ETF or owned by J.P. Morgan or moved or ownership transferred at all. So it's kind of hazy subject right there. And JP Morgan and other big bullion banks are very active in the futures markets, the paper silver market, where silver is even smaller than gold in that market and therefore much more easily manipulated. If you look at the various silver price slams, one of which is going on while we're talking right now, they've all occurred between the hours of 9 and 11 in the U.S. market, the New York market. Silver has relentlessly clung to $30 and above. And the brief instances where it's dipped below that or been driven below that, it's bounced right back up. So I think the silver story is unique in the precious metals universe. I think it's going to leverage gold, and it has always done that in this kind of a bull market, this kind of a gold bull market. I expect it to do so again. But it may do so even more explosively right now because of that structure in the market where shorts are desperately trying to defend their positions. When that dam breaks, I think we could see something really extraordinary to the upside.
The recent significant profit-taking in gold has had an outsized effect on silver prices. However, market volatility is starting to calm down amid growing expectations that the Federal Reserve will cut interest rates by the end of the quarter. In this environment, commodity analysts at Bank of America, led by precious metals analyst Michael Widmer, expect silver to find its footing and once again outperform gold. Can you elaborate on why you believe we're entering a new era for precious metals? We welcome your insights in the comment section below. If you found this content valuable, don't hesitate to give it a thumbs up, and don't forget to subscribe to stay informed. Thank you for joining us on this journey.